Let's talk to Damilola Olupona now, analyst, Chapel Hill. Dan, I'm great to have you. Good morning.
Yeah, thank you very much for having me. Good morning.
Yeah, so the management of Stanbic IBTC recently announced that they are setting up a fintech subsidiary. What do you think, necessitated that move?
All right, thank you. What necessitated a move is the need to bridge the wide gap, which currently exists. As you all know, the number of unbanked Nigerians, are still very much elevated. And we've seen, the fintech players, just pitch their tent, in the banking space. And some of them are started recording successes, on that front. So what Stanbic has just done is just to respond to the competition, from the fintech players. And, over the last 2 years, the banking earnings have not been impressive. In fact, last year, Stanbic reported lower profit after tax. And, this move is one, in an attempt to grow its customer base. And secondly, is also in an attempt to ward off competition from the fintech players.
Quite interesting. But do you see other banks, towing, similar path in the near to medium term?
Excuse me.
Sorry.
Yes, I do. In fact, Guarantee Trust Holding Company, has also announced that they'll be setting up a fintech-focused subsidiary as well to respond to the competition, in the fintech space. Access Bank also announced that they'll be pursuing an old code structure. Whilst we don't have details of the subsidiaries that will be under the old code structure, I would imagine that fintech would be one of the subsidiaries, they'll be looking to create, under the old code structure. So, and the banking system currently is moving from the normal brick and mortar banks to digital banking. So what we are now seeing is more banks, more banks are now pitching their tent, towards enhancing, their digital offerings to customers, as it has been proven that you can reach more customers, via the internet or via providing various financial digital products than you would do if you were just situated in your normal brick and mortar branches. So I think more banks will embrace this development, and we would see more banks, both in the tier 1 and tier 2 space, just set up fintech focused subsidiaries, to expand their market share and to also ward off competition from the fintech players.
All right, Dami, but how big of a threat are the fintech players to traditional banks?
I would say they are somewhat a threat, as we've seen the kind of volumes and values of transaction that some of these fintech players are currently recording. And but then I think the banks have what it takes to also give the fintech players a run for their money. If you look at most of the fintech players, most of the banking, the big banks, for instance, you look at their customer base. Citing Access as an example, Access has over 42 million customers, which means that they would be able they would be able to compete favorably, in the fintech place or in the digital banking space, if they decide to toe that path. So whilst they are a threat, I think what the banks just need to do is to move faster, like we've seen for the likes of GTCO, Stanbic, and maybe Access Bank. I would want to see more banks, just set up, fintech focused subsidiaries, before it becomes too late, and before it becomes very difficult, for them to catch up with the fintech players. So while they are a threat, I also think the banks are able to compete favorably, if they're able to move fast.
Yeah, but positioning is key, for that to happen. But which banks do you think are better positioned to thrive, against fintech competition right now?
Yeah, I think the tier 1 banks, generally, looking at the size of those banks, and and the fact that most of those banks, have a Pan-African outlook. They have subsidiaries in various African countries. So I think, the tier one banks, the likes of Access, GTCO, Guarantee Trust Holding Company, Zenith Bank, UBA, and, First Bank and the likes, I think they have what it takes, to succeed, in that space. Just looking at what First Bank, currently is doing with its First Money mobile agent, I think is somewhat impressive. And, like I mentioned before, GTCO has also set up a fintech focused subsidiary as well. And other banks are beginning to respond. So for me, in terms of the banks, that would do well in that space, considering the number of customers, the size of their customers, and considering, the value or how rich their digital products are. I think currently the tier one banks, are better positioned, to thrive. That's not to say that the tier two banks, won't also compete favorably. Wema Bank's alert, is currently posting very impressive numbers. We've seen the likes of Fidelity as well, just launch various digital products as well, and that's seen a very high level of customer acceptance as well. And other tier two players are also doing a lot, to also enhance, their digital offering as well. So I think generally Nigerian banks are positioned to thrive, but I think at the moment it's a case of who is able to move faster and who is able to expand, their market share in that space.
Quite interesting. And the real sector, players need credit to scale operations, to contribute meaningfully. So how the fintechs, how are they matching up, talking about credit?
Yes, we've seen, some fintech players, just expand, their offerings, beyond the payment offering or payment system offerings. We've seen them, just expand their offerings, towards the credit side. And one of the major issues, we've had to grapple with over the last 2 years is that we've seen, most banks, just take the back burner, when it comes to creating credit or expanding credit. And I think that's due to the risk, the economic risk, that came with the coronavirus pandemic, and all of that. So I think it's a good one, that the fintech players are also pitching their tent, towards expanding credit, to the real sector, and also expanding credit, to retail and corporate customers. I think it's a good one because that will help foster economic growth, and it will also consolidate, on the commercial banks' effort, to create credit, to the real sector, and more importantly, it will also enhance CBN's initiative, which one of it is has always been to foster economic growth, via creation of credit, to the real sector. So I think it's a good initiative.
All right, but one of the big selling points for digital banks that they've used to take the market by storm is free transfers. Do you see major banks taking up that this year?
I think it would be a struggle, for the traditional commercial banks, to introduce incentive, like free transfer. And the reason why I said so is, 2021 was a very challenging year for most banks. A lot of them reported, uninspiring earnings performance. And I think at the moment, most banks, are currently aggressive, when it comes to creating their earnings, and when it comes to also ensuring that on a year-on-year basis they are able to deliver strong earnings. Excuse me. So I think it would be a very tough decision, for most of the traditional commercial banks to give initiative like free transfer. And Yeah, they might come up with other initiatives, but in terms of the free transfer, except we see other fintech players, just toe that path, and we are starting to see that have negative effects, on the patronage of the traditional commercial banks. Except we start to see that we might not see most traditional commercial banks, just hold that path.
Right. Anyway, we've seen, most of these fintech companies, raise record amounts, regardless of the headwinds. What's your outlook for 2022?
Yeah, in terms of the fintech players, I think the outlook is positive. If you look at the Nigerian market, for instance, financial inclusion, is somewhat very low, at the 40 to 50%, levels. If you also look at the number of unbanked Nigerians as well, it's also very high. So the Nigerian market, appears to belly, a lot of opportunities, for investors who are looking to set up, various fintech offerings in Nigeria. So I think from that perspective, I think it will be positive, for investors looking to invest in that space, and we might see more fintech players, coming into the Nigerian space. And generally for the Nigerian banking sector, I think 2022 would be a better year, relative to 2021. Although bulk of the pressures we saw in 2021, still exist. But I think, the banks will be able to weather the storm, better in 2022. Considering the fact that on a year-on-year basis, interest rate is expected to be elevated this year. And, for the tier one players, who have large retail deposits, that might be positive, for their net interest margin, going into 2021. And also in terms of the macroeconomic outlook as well, 2022, appears to hold some promising rhetoric, for the Nigerian economy. So I would expect that from an asset quality perspective as well. I would expect that the banks will find it easy, than they did in 2020 and 2021. So generally, I think the outlook is somewhat positive, on a case by case basis, depending on the makeup of the bank's balance sheet. I think generally the outlook is somewhat positive, and I think
All right.
banks should perform better. Yeah.
Okay. All right. Thank you so much, Damilola Olupona, the analyst with Chapel Hill Denham. Thank you so much.
Thank you very much for having me.
Enjoy the weekend.